Welcome back to another episode of War Room Huddle Podcast, an RFG Advisory podcast for independent financial advisors who want to crush everything and take their A game to the next level. Brought to you by RFG Advisory with your hosts, Shannon Spotswood, Bobby White, and Rick Wedell. This is War Room Huddle.
So this is a very special episode of War Room Huddle. I am joined by Rick Wedell, my business partner and chief investment officer here at RFG Advisory. And you're in for a real treat because as CIO of RFG, he has a truly remarkable background. It's always fun. We say, me and Rick's mom are his two biggest fans as we give his introduction. But there is no podcast that we can do where we dig into the value that you're bringing to our advisors and the impact that you're having on the industry without providing a little bit of room for me to brag a bit on you.
That's fine. I love these podcasts.
You're going to feel great.
I feel great after every one of them. It makes me just feel wonderful.
All right. So Rick was raised here in Birmingham, Alabama, which is the global HQ, as I like to say, of RFG Advisory. And
International Finance Hub. International Finance
Birmingham,
Hub.
Alabama.
Yes.
Exactly. You know the headline we're writing. Whoever would have thought the RIA of the future was built and born in Birmingham, Alabama.
Yep.
That gets me out of bed in the morning. So, Rick's got this really unique background, and it's incredibly important as we think about how advisors spend their time and the value that we deliver from a platform perspective. So growing up here in Alabama, he graduated from Mountain Brook High School, went on to Harvard, where he was studying applied mathematics.
Yes, that's correct.
Graduated magna cum laude.
Yes, it sounds way more impressive when you say it. Thank you.
You're absolutely welcome. From there, he joined Bain Capital as one of the first employees in what is now known as an international juggernaut in finance. A couple years later, they sent him off to Stanford, where he got his MBA. And when he shared his resume with us, he very casually and I think it was even in small font, said that he was the Henry Ford Scholar at Stanford. And I'll be honest, I had to Google it. I was like, what is this Henry Ford Scholar business? Faker. And then I Googled it, and it turns out he was number one in his MBA program at Stanford. So just a tremendous accomplishment.
They give you a very small plaque.
It was very small.
It is a plaque about this size, about 3 inch by 3 inch. And
it's like a paperweight.
It is. It really is.
A paperweight of greatness.
Yes. Although I think somewhere in the B School library, my name, behind the corner next to the snack machine or whatever else, there's a list of all the people that have gotten it. And I think my name's there too. Okay. Fair enough.
We'll take
searching for the sign.
Pilgrimage.
Yes.
It's
somewhere.
like a historical marker.
It's a very obscure historical marker.
So
yes.
Harvard undergrad, Stanford MBA, and then 12 years at Bain Capital, where when you left, you were the head of consumer fixed income and helping to run a very large portfolio for them. So this is not your typical, CV of a chief investment officer of an RIA. And it was an incredibly important pillar as we were building RFG 2.0, which was the delivery of institutional investment management. So what I would love, to kick us off today is for you just to put some color around that. I mean, it's an exciting story being at Bain during that really defining chapter of what they've become and the impact that they've had.
Yeah, no, absolutely. This is an interesting story in the sense that, like any good story, it begins with there was a girl. I was graduating from college. I had been dating a young woman for a long time, and she was from the Boston area, and so I looked to find a job in Boston so that I could be near her. And I interviewed with a whole bunch of different places, and One of the places that, wanted me to come on board was this tiny little shop called Sanctity at the time. It was the fixed income affiliate of Bain Capital. It had about 14 or 15 investment professionals at the time, $300 million under management. And it was just this, it was a small thing. And I loved that about it. I loved the people that were there. It was sort of energetic and dynamic. And so I wanted to be near my girlfriend. This seemed like a perfect fit. And so I took the job. And my girlfriend and I broke up 3 months after graduation, but then I had the job after that, right? And so you can't exactly go into your boss's office after 3 months. You've got contractual requirements at that point. You took a signing bonus, you're staying. And so it just evolved. It was a very exciting time for me, a lot of responsibility, kind of drinking from the fire hose, if you will. I was an analyst. I didn't know anything, but, when there aren't that many people and you're at kind of a startup-y shop, you're asked to do a lot of things and expand and grow in ways that you've never really expanded or grown before. 2 years later, they gave me my first portfolio to manage. It was textiles and apparel. I want you to rewind the clock a little bit. In 2003, textiles and apparel in the United States, not a super exciting space, but it was a space that, they needed somebody to cover, and I was tapped to cover it. And so, a $25 million portfolio when you're 3 years out of school is like the greatest thing in the world. And so a year after that, I went off to business school, and they brought me back, and, I picked up consumer and just kind of ran with it. And, before you knew it, you looked up and we were a $30 billion asset manager with 200 plus investment professionals, with 6 offices on 4 continents. So it's just a huge and wonderful experience. And if you ever have the opportunity, it's that old Google example, right? Like, if anyone ever offers you a seat on the rocket ship, you don't argue about whether or not it's an aisle or a window. You just take the seat. And if you ever find that opportunity, and that's one of the things that I love about RFG, is that sort of like group of really smart, really talented individuals just sort of building something bigger than themselves. And that's, what I had at Bain. And when I looked up and decided it was time for that next, page in my career, I knew that was what I kind of wanted to find again.
And I think, that's really the unifying thread of our story at RFG. I think both of us had this experience working on the institutional side of the business, working in these like funds and these firms that grew very large in a short period of time. And I call it seeking the intangible. You call it this intersection of opportunity and talent to build something bigger than yourself. So you had the pick. I mean, I remember when we were recruiting you, and Bobby and I, had started the search for a CIO in Alabama. We extended it out to the Southeast. We quickly realized what we were looking for. We needed to conduct a nationwide search. And I think through good fortune and by the grace of God, your resume got passed to us. And
Birmingham's an interesting job market in that. Yes.
But when it came down to it, Wall Street was calling. You had a very attractive background and experience to be able to offer. So why RFG?
Why RFG? Well, let's see. For one thing, when we talk about that seeking the intangible, it requires somebody who's willing to kind of go out there and do crazy things, right? And so, when you think about what we were starting to do when we were building RFG 2.0 and sort of building the RIA of the future, I like to liken it to, I had some offers from some established hedge funds and some other folks like that, where it was, very much a little bit of rinse repeat with what we had done previously at Bain, maybe at a more senior level, maybe, at a different level in the organization's history. There's a little bit rinse repeat, right? These were established businesses. And then I had Bobby and Shannon looking at me saying, hey, we got this great idea. We are going to change the engines on the jetliner while it's flying, right? And, you're going to come over, you're going to be on the retail side, and the job is going to look a little bit different, and it's going to require you to stretch yourself in different ways that you haven't been stretched before. And I was like, you know what? That sounds awesome. Like, let's go do that, right? Because you only get one life. And, if you think about your professional career as being able to reinvent reinvent yourself a couple of different times through the course of your professional career, I think that's appealing, right? It's appealing to be able to do different things. And then when you meet people at the organization that you're joining and you get excited about what those people are, who they look like, what motivates them to come to work every day, and you can just see the talent, like it has a different fit and feel to it. And I liken it to, there's that classic fable, right, of building the church in the Middle Ages. I know I've told you this one before, but right, like, so there's a guy, they're building this cathedral, right, and this guy comes in and he interviews every one of the workers, right. And he walks up to the stonemason and says, "What are you doing?" And he's like, "Oh, well, I'm carving the stone to go in the archway, and it all supports itself." And he walks up to the carpenter. "What are you doing?" "Oh, well, I'm sawing the wooden beams that go in the pews," and et cetera, et cetera. And then they finally get around to the janitor, who's just pushing a broom through the church. And they ask this individual what they're doing, and they say, "Well, I'm building a cathedral," right? Yeah. And it's like, if you find a place where the vast majority of the employees, of the associates, whoever they are, say, "Well, I'm building a cathedral," like, that's a great culture to be a part of. And that's, really the reason why I'm here. The job itself matters less than the culture and the climate and the energy that you encounter every day when you walk into the office.
Are you an advisor looking to make the move to independence? RFG Advisory is an innovator in the wealth management industry with a winning culture and a fully integrated tech platform designed to help advisors take their practice to the next level. Let us get to know you at RFGAdvisory.com.
All right, so clearly joining RFG Advisory and now, the majority of your day job looks very different than it did at Bain Capital. So just what do you do and what do you love about it?
Okay. So, my job encompasses several roles. Let's start at what I'll call table stakes, right? So the investment process itself, what do we do? We spend a good part of every day looking through the investment portfolios, the investments that we manage, just looking at those securities and thinking about, are there rotations that should be made? Are the securities behaving the way that we think they should be? Are we appropriately diversified? Is it time for a rebalance? Scanning through accounts and looking at people's individual positions and positioning and thinking about, how should those accounts...
Blocking and tackling of being a PM.
The blocking and tackling of being a PM, which I mention here, but I just want to say there's a big difference between how that works in an institutional setting versus how that works in a traditional retail setting, right? So it's not just about, whoever the last wholesaler was that passed through, or asking somebody to do your analysis for you. That happens a lot in this industry, actually, where one of the wholesaler firms will say, "Hey, we will perform this complex analysis on your portfolio in exchange for allowing us to recommend how your portfolio would be better if you would use our product." That's not exactly the way that we go about the investment process. We spend the money to subscribe to Bloomberg, and we use the tool frequently to make sure that the portfolios are well diversified.
And I don't mean to cut you off, but I think this is a really important distinction.
Yeah,
and it was a very intentional decision to build the RIA of the future, to build a platform really dedicated to supporting independents and independent advisors and their clients. The expectation and rigor of being a portfolio manager on the institutional side of the business looks and feels and walks and talks very differently.
Well, I think it starts with, you trust no one other than yourself, right? So if you didn't do the analysis, you don't really trust it. And that's, where we start from on a day-to-day basis of, digging into these funds, digging into their individual holdings, digging into the ETFs, and just making sure they're performing within the parameters that we sort of originally established. And that is the day-to-day blocking and tackling of the business. the fun stuff over and beyond that is doing stuff like this, meeting with clients, meeting with prospects, giving presentations. I laughed before I stepped into the studio. I was actually updating a presentation for a lot of our clients, and doing that I'll be giving next week. I'm actually in 3 separate cities next week.
Rick on tour.
Rick on tour. That's exactly right. So 3 nights, 3 different cities, presenting to clients and just talking to them about the markets and what's going on in our views. And that type of personal interaction is very important, right? I mean, this is their money, right? It's very different in that regard than the institutional setting, because you know who your clients are, right? Like, these are clients that might have, $500,000, $200,000, $1 million invested with us, maybe more. But they're interested in knowing who it is that manages those portfolios for them. And whether that's an in-person meet and greet, whether that's a presentation that they see a give, or a podcast like this, or a video that we shoot out, or whatever it might be, it's important. That level of client interaction is important and is lost on, I think, a lot of the people in the industry, in terms of, these are clients. They want to feel like they want to know who it is that manages their money.
I pulled some stats on that, and congratulations. You were recently named by ThinkAdvisor a 2021 Luminary.
Thank you.
So we get to
I
go
appreciate
like
that.
Harvard, Stanford, Henry Ford Scholar, Luminary.
I kind of want a small lighted sign in my office that just says Luminary. And if I could get one of those, that'd be fantastic.
As long as it has like an off switch.
An on and off switch, yes.
So I can be like, not so illuminating
Right,
today.
exactly. Perfect.
But I did pull some stats because, to your point, that this is a highly personalized, highly customized experience, both for the advisors that you partner with as well as their clients. And in the last, 12 to 15 months, you've recorded 60 client-facing videos. You've had 13,000 total video views, 11,000 hours of watch time. As you mentioned, there's been countless one-on-one meetings, countless dinner presentations, virtual presentations with advisors and clients, and one of my favorites, like indicators of truly, next week, Rick on tour, multiple years of diamond status on Delta Airlines.
I still think the greatest moment for me along this journey was when I found out that my mom was actually watching all of the video content that got sent out.
No. You've got to tell the story about being on the fridge.
Oh, that is true. I'd been giving presentations for a little while, and I got to know a client in the Shreveport area, and I was scheduled to come out and do a dinner, and I get this text message pop up in my phone from this particular client that just has a picture of his fridge. And it's, our client age profile. A lot of these folks have grandchildren. This particular individual did. And so there were pictures of his grandkids and some artwork and the little letters with the magnets. And then there was my flyer with my picture and the date of my next presentation sort of circled. And he just said, "Hey, you made the fridge. Thought you'd like to know." And in fact, the photo of that text actually still hangs in my office. So if you're out there and you're a client and you ever do that, please send me the photo and you can make the photo board. But yeah, it was it's actually really great, because when you're on the institutional side, you never really get to know your clients, right? And I can't even, I'm not even allowed to mention who our clients were. You can imagine who they are. They're big universities and endowments, and these
pension
are plans. And these are, funds that are managed on behalf of other people by a group of managers that have a team of consultants that work with them on selecting the investment manager for the investment management team that manages money on behalf of the other. And so you never actually get to know it's not like a student at one of these universities ever came up to me and was like, "Oh, hey, I understand that you manage our endowment," right? Like that doesn't happen. But in this role, it really does. And it adds this personal touch and this sort of personal connection to the money that you're managing in a way that you never really get on the institutional side, right? Like, you take your job really seriously when you have met the people that you are managing you're managing their retirement assets. And it kind of gets you it gives you a real motivation that you never really had before, right? It's not about like, oh, I better make sure that I do my best job today because, so-and-so's several $billion endowment needs another couple $1,000,000. It's more about like, this is about like Susan and Charlie's retirement. And, I have fiduciary duty to them. And not only do I know them, but I've met them and I've met their kids and they were at the barbecue last summer. And so, along with a whole bunch of other folks. And so like, I need to get on it today because these are the people I serve. And it's a great feeling.
It's a higher calling.
It is. It sounds weird because in finance, there's not a lot of talk about higher callings. But I really feel like, when you interact with that individual who's scared, right? Who is frightened about the markets, they know they need to be invested because let's face it, like the days of being able to say, oh yeah, I'm going to go buy treasury bonds and just live off the interest for however long, those are long since past. And so these are individuals that have to come into the marketplace. They need this in order to make it, they need this in order to make their money last through retirement. Being able to give those individuals confidence and being able to give those individuals a path to get from point A to point B and have confidence that their money is invested wisely. It really feels good at the end of the day, right? To know that like, their money is being watched after by somebody who's qualified to do it, that their money is being invested properly. It's not a sales gimmick or this and that and the other, and that they're going to get from point A to point B without so much worry and fear in their lives. Like really, I don't know. I bring it back to mom. I think about mom and her assets. And anyway, it's just nice.
I'm going to give a little plug before I'm going to take a hard right turn.
Oh boy.
So the plug is, one of the things that I think is your superpower is that you're a fantastic communicator of complex topics in an engaging and understandable way. So as I mentioned, check out our YouTube channel because there's 60 videos that Rick has recorded. He records almost on a weekly basis, a market commentary, and then whatever is the topic du jour that we feel is important to either take a stand on or lend our voice to the conversation, whether it be cryptocurrencies, inflation, what's happening in with the Fed, what's, just whatever is going on in the marketplace outside of that market commentary. So a little plug there. Your videos really are awesome. So check those out on our YouTube channel. All right, hard right turn.
Okay.
One of the, I would say one of your skills that RFG really benefits from, and in turn our advisors benefit from, is that you've got this long career in leverage finance. And so we do spend a significant amount of time helping our advisors to craft their succession plan, how to structure a deal, if they're looking to join and need a forgivable loan. And this is honestly, we'll probably need to do a second podcast just talking about advisor succession and deal structure and all the rest of it. But I thought it would be fun just for this context. And I want to put it in just one of those topics, which is succession planning. We're in the midst of a succession planning crisis in the industry, and one that I would kind of boldly and provocatively say we're not going to solve. So 64 is the average age of a financial advisor. About 15% have a succession plan, despite a global pandemic and the retirement wave that is sweeping the nation in the baby boomer set. Those numbers really aren't moving. So what is your advice to advisors as they think about, should I go down that path and think about being intentional with my succession?
Okay. So I'm probably going to say something that's going to rub a number of advisors the wrong way, but I'm going to say it anyway, which is there is this idea out there in the industry, particularly amongst, I will call it the mid-sized advisors, that having the lowest expenses that I possibly can is a good thing. And that's fine, except for the fact that if your business is not transferable, like if you can't walk away from your business with minimal impact to the business, it severely limits the valuation that you will receive in a succession planning process. Okay. And I I kind of phrase it this way. Okay. It's one thing to have, maybe some administrative personnel that are handling paperwork and maybe some operations and some billing and this and that and the other. It is entirely another to be having, to have junior advisors that are working with you on the management of the practice, other financial planners, truly a team approach to your practice. And it's hard, I get it, because you have to hire these people and pay these people, and these people aren't cheap, right? So, whether you're bringing them in as a W-2 underneath you and you're paying them a salary, or whether they're giving them maybe a split rep code and giving them some of the payout of your existing clients or whatever else, this costs you money. And it may be hard for you to justify, at least in the short term, what does that expense look like? And, why wouldn't I just keep that money and continue to do all this work myself? And the answer is that when you get to the age of 65 and you all of a sudden say, okay, well, what is my practice worth? If your practice is not capable of you stepping away from it and having minimal disruption to the overall business, then it's worth whatever you can convince somebody to buy the clients from you for, okay? And fundamentally, that is limited by the cash flow of the underlying assets. And fundamentally, that means you're going to get about somewhere between 2.5 to 2 3/4 times revenue. Like that's just where it is, okay? I'm just going to tell you that if you're trying to sell your book of business to another advisor that is not super well capitalized, et cetera, then that is where those businesses transact at. And if the buyer is more developed than that, but they see that all you're really selling is a list of clients and an unwillingness to have anything that goes along with it, they're not going to pay more than the market rate, right? So it's really one of those things, if you're really diligent about building up enterprise value in these successions. And we see all these crazy multiples that are thrown around, right? Like you're worth 8 times your EBITDA. You're worth, 7 times your EBITDA, earnings before interest and tax, earnings before owner's comp. You're worth 8, whatever these multiples are. Yes, you are. If you have built an enterprise, if you are one of 4 partners that are working in the practice together so that when you leave, the other partners can take over your share, if you are, the senior partner with 3 junior partners that can step in to fill your shoes, then yes, you are worth those multiples. And if you are a one-man or woman band where it's you and an admin against the world, then you are worth about 2.5 times revenue. And that is just where it ends, right? It's one of those things, like you either build an enterprise so that you can subsequently sell it, or you run your practice until your boots fall off. And that's, where you end. I guess it's die with your boots on. I messed up that metaphor at the end. Sorry about that.
Yeah, that's one we're going to have to come back into the podcast studio, because I think there's a lot we could talk about, and that, that our listeners would really benefit from your experience. I certainly, as we've structured deals for our advisors and worked on a lot of these succession strategies, they're, your favorite saying that we've all adopted, the art of the possible.
Yes.
But there is the underlying linchpin on this, is that the possible is contingent upon how you've built your practice and how early you've started thinking about creating that enterprise value, and waiting until you're 65 and like, now I want to maximize value. It's challenging.
It is. It is very challenging. It is very challenging.
All right, a lightning round, really fast.
Lightning round. I'm not good at fast answers, so go ahead.
Do you believe in writing white papers?
No, I do not. I fundamentally believe that video content is the wave of the future. I'd much rather get into a podcast studio and just talk about whatever it is, because let's be real, nobody wants to read a PDF ever. That was really cool about 10 years ago. It is not cool in today's day and age. People digest content on their phone or on their iPad. And so they want to be able to pop open a video or listen to a podcast or something else like that. They do not want to read a white paper about it. Plus, I'm okay in the podcast format. I'm a little bit like, I don't know, white papers feel too much like term papers. So we're not writing those.
And no one ever said, I had a total blast writing my white paper.
It's funny. Like I wrote when we first got here, I was like, I'm going to write a white paper on market timing. And like, I think we printed 400 copies and I think 395 of them are still in the copy studio. It's funny. You can't see him. Gibson's off camera cracking up because he knows that this is true. And it's actually a great paper. Like I was really proud of it. No one read it. No one cared. But we get like great reactions to the YouTube videos. So we're going to go where the content, you deliver the content to folks how they want to consume it.
One of Rick's signature hallmarks of his conversation style is, and then there was a study. So what's your favorite study?
I'm gonna pivot this and give you my least favorite study.
Okay, least favorite study.
Because I heard this on the radio rolling in this morning, and it speaks a little bit to, like I had one of these kids come up and ask me the question, the college student, like, hey, should I take statistics and math and everything else like that? And it's funny to me because I never thought I'd be anybody's role model, but in any event, like this kid wanted my advice, and I was like, well, do you want to be happy? Or do you want to understand how the world works? Because if you understand math and statistics, you'll kind of understand how the world works and how data gets processed and everything else like that. But it's going to make you really angry when you hear these studies and this data that comes out that's just absolutely on face ridiculous, right? And it speaks a little bit to like how you can manipulate data to make it say what you kind of want it to say if you're a little dubious, which by the way runs rampant in this industry. It really makes me angry. But I'm in the car the other day and I'm listening to the radio coming in. And there's this study from the University of Chicago that just came out that's like, for every hot dog you eat, your life expectancy goes down by 35 minutes, right? And for every peanut butter and jelly sandwich you eat, your life expectancy goes up by 35 minutes. And like, I'm sitting in there in the car and I'm just fuming. I'm so angry because the DJ starts going on about like, well, they've got to cancel all of these like hot dog eating competitions because those are just everyone, they eat 65 and they take like 3 weeks off their life. And I'm like, that's not the way that math even works. But let's be real, like these variables, they're what's called indicator variables, okay? They're not actually, it's not the hot dog that's subtracting 35 minutes off your life. It's the fact that if you eat a lot of hot dogs, you're probably eating out a lot, eating a lot of processed prepackaged food. You're probably eating fries and drinking beers with that and this and that. And so it's an indicator variable of an unhealthy lifestyle, right? Like that's the way that math works when you do that regression. In the same way, a peanut butter and jelly sandwich is not some sort of magical cure-all where when somebody's in the ICU, they're like, oh, quick, get the peanut butter and jelly sandwich. Like, that's not the way that works either. But if you eat a lot of peanut butter and jelly sandwiches, it probably means you eat at home a lot. You're making your own food. You're probably having fruit or water with it or something else like that. Maybe you work out, like, I don't know. And so it indicates a healthy lifestyle. And so when you regress on these things, it's like, it's just a real example, and it makes me ragey, and I get a little ragey, and I know this was supposed to be the lightning round. But it's a great indicator of how people can take statistics and manipulate them to say exactly what they want them to say without an actual understanding of the way that math works and putting that kind of stuff into context. And so I heard it the other day, and you asked the question, and it just made me rage.
I'm going to tie this back and wrap us up on that because it's interesting. It speaks to, in some measure, why it's so important to have a financial advisor and why it's so important for that financial advisor to have someone who they trust managing the money. Because ultimately, all of this is human emotion.
It is. And, we could do an entire separate podcast, and I would love to film this podcast and come back. But we could do an entire separate podcast on like myths and marketing gimmicks and pitches that are dubious in the investment management industry, right?
Yes,
like we could go through ream after ream after ream that make you laugh, but also make you shudder in the way that people market and package investment opportunities.
We might do that in disguise.
Okay. Yeah, exactly. That'd be fantastic. But yes, it is a topic that just kind of makes my blood boil a little bit. And God knows, when I get ragey, I get talkative. So, I'd love to come back and get it in the podcast.
My lightning round. Rick, thank you so much. I promise we'll get back in here and film some more on War Room Huddle.
Thanks so much, Anna.
Thank you for tuning in to War Room Huddle. War Room Huddle is a production of RFG Advisory, a leading innovator in the wealth management industry. To learn more about RFG Advisory, head on over to rfgadvisory.com and subscribe wherever you listen to this podcast. We look forward to seeing you on the next episode of War Room Huddle.